All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Gar Capital. It is Wednesday, August 23rd, 2023. Thank you so much for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time here on our YouTube channel. Before we begin, make sure to hit that like button if you like these videos, comment your questions and live questions on the live chat. Glad to have you on board this morning. Let's go ahead and begin. The Dow futures are up 30 points. We were up a lot higher earlier this morning. 14,994 on the NASDAQ, up about 35 points. I did have a NASDAQ long. We were in at 1520, 15020. We got as high as around 15.1. Didn't get there. Unfortunately, we got that rejection there. So what I'm looking for is that now we're looking at NASDAQ. Let me go ahead and expand this chart rather quickly. 1520, as you can see, that's my yellow line. That's kind of that zone I've been looking for. We are setting up for an inverse head and shoulders. The problem is that NVIDIA looms. NVIDIA does loom. We're going to talk about that today. The earnings report is after the bell. Possible double top. So again, if we want to go ahead and go long, we need to go above 15.1, and then that will confirm this inverse head and shoulders. And then your target will be about 15.2, which is the trend line that was broken just recently. So that's my thesis on NASDAQ. The problem is that NVIDIA does loom all around. That earnings report, probably the most important earnings report probably since maybe Apple. Let's just say Apple is always important. Continuing on, S&P 500 futures 44.05 this morning, up 0.15%. Russell 1858, that's up 0.07. 10-year Treasury yields pulling back 4.281. I posted a note on the market blog on my thoughts on rates and the dollar. So again, if I have some time before we're done for the session, I'm going to go ahead and talk about that rather quickly. But I really want to keep it focused on NVIDIA because that's what you guys really want to talk about, and I totally get it. So we'll get to it rather quickly. Crude oil 78.36, down 1.64%. I also posted a note on the futures chat regarding a possible crude short. But again, we have inventories today at 10:30 in the morning. We also have Powell on Friday, so a lot of moving parts. The good news is that, crude is not exactly exposed to NVIDIA earnings, so there's always other ways to make money, not just on one stock. Gasoline futures down 1.46%, $2.53. Gold futures up 0.37% at 19.33. Silver futures 23.90. That's green about 2%. Copper $3.77, up 0.56%. So seeing some commodities catch a bid as the other than oil, since volatility index 1698, but really the dollar is up and it's breaking out. It is now above the 200-day, 103.93, yet stocks are green. Interesting stuff. Again, we talked about don't fall into that trap for that one-for-one correlation. It matters until it doesn't. Keeping it moving here, euro dollar 108.07 on the euro dollar. That's down 38 pips with the dollar being up today. The yen doing better than the dollar today, 145.42, pound dollar 126.37. Even crypto's up, so a little bit of risk on there. Even when the dollar's higher, it's interesting. 25,825 on Bitcoin futures, 1637 on Ethereum. Let's go ahead and just get to the questions rather quickly. They are piling up. Javier says, good morning, Carlos. What do you think is happening with the banks, Goldman Sachs and JPM? Very simply put, the issue with the banks here is that higher interest rates hurt their margins. Remember, they have to borrow at the 2-year and they lend based on the 10. That's why the yield curve inversion is so important. But the short answer is really these downgrades from S&P, Fitch, and such. There goes crude oil breaking down. So I didn't think that we'd get that alert. Again, I'll keep an eye on that since we're just doing the note. We don't have to rush into it either. This crude short, I'm just surprised that it filled. Let me see if I can let Nick know about crude. My alert. Take a look. I like to do things focused at one time. I don't want to do too many things at once, especially when it comes to members and signals. Very important to make sure that we focus on the task at hand, which is information right now. We were talking about the banks. Really, the S&P, Fitch, and those credit rating agencies downgrading the banks has really hurt. But again, they didn't downgrade the big banks. They downgraded the regionals. And again, regional banks, it's still the same sector, regardless if it's regional or national or major multi-center banks. That's just where we are. Goldman Sachs is a little more executive centric because Morgan Stanley has been outperforming them, which is basically the closest competitor in terms of a peer group, since Morgan Stanley and Goldman Sachs are focused on primarily investment banking. So Morgan Stanley outperforming Goldman Sachs does not look very well on David Solomon, the CEO. So we could have a little bit of issues in terms of management for Goldman Sachs as more shareholders get upset. Granted, the macroeconomic backdrop in terms of those Fitch ratings and those S&P ratings are not helping the banks. The banks at this time, this is the problem with them. They are regulated. They're just like utilities at this point. It's based only on their dividend and their buybacks, just like utilities for the most part. So again, you're not going to expect explosive growth like you would on an NVDA, an AMD, or names like that with banks. Really, when you own banks, you're really owning for the return. But if you can get a risk-free return, on an online savings account, 4.5% sit in cash, risk-free, you're going to do that. So that's why banks right now are not very attractive quite yet. When you have that kind of economic backdrop mixed with higher interest rates that are competing for your capital. So again, if you asked me today, would I want to buy Goldman Sachs here in a short term or have an online savings account? I take the online savings account, stay liquid until we find some better opportunities at better prices. And that's really it. Status on Amazon and Boeing. I do have my Amazon calls. We are up this morning. You can see we're trading now at 134.71, we'll call it. That's the bid. And we're a couple of cents above. We're still waiting for that 136.30 break, Joey. So that should be coming relatively soon, especially if the NASDAQ continues to go higher. The goal is to get this before NVIDIA. So let's see what we get. Boeing is a little more insulated from that earnings report. It is absolutely flat-filled right now. Let's see how we get at the open. Targeting this 200 1-hour MA at 232.95. We are not overbought at all or anything. 233.52 is that level to break on Boeing. I fully expect us to get that today, honestly. Would you buy PayPal here for the long term? Long term, yes. I don't hate it. And the only reason I say I don't hate it is that, again, it's long term. The problem here is that, are we talking about long term in decades or we're talking about a couple years? Again, long term is different for everybody. I have an alert at 44.30. And the reason I have that is that it'll confirm a way oversold level on PayPal on the largest max weekly chart possible. So really, in my sense, trying to really dumpster dive here when we want, remember, this is PayPal in a really green market. So let's say if we get a little more volatility in October, which is what I'm expecting seasonally, I think PayPal gives us another crack and we can get a little lower. We're not there yet. Again, like I said, it looks good, but it ain't there yet. I think you can get a better price on PayPal. Don't buy the sneakers just yet. You can shop around, I say, when it comes to PayPal. And guess what? You can get paid 4.5% just to wait in cash. I think Robinhood pays like 4.8% in uninvestable cash. Not bad while you're waiting for PayPal to turn around. Now, again, if you want to dollar cost average this over time, go for it. You have gaps to fill in the daily. 223.603 within 3 years isn't out of the realm of reality, especially if there's a turnaround story. Maybe the new CEO comes in and changes the game. I remember when General Electric was trading at $2, and now that completely changed. Granted, we had some reverse stock splits and stock splits here and there, but again, turnaround stories do happen on names. PayPal, the only issue with them, in terms of fundamentally speaking, is that they were very closely tied to eBay. Remember, they were one company, but not many shop at eBay. Where do people shop now online? Amazon. PayPal doesn't really have a really big presence in terms of the online shopping, but PayPal does have a huge presence when it comes to payment processing for business and small business owners. That went higher due to the COVID pandemic as everyone was starting side hustles or doing different things online. So again, PayPal back then when you had the revenue generation, yes. But at this point in time, people are getting back to the office. I don't know if those online businesses are still getting the same volume as they were getting before. But again, PayPal, that's really the issue when there's so much other competition out there. People like using their debit cards or credit cards for the rewards. Maybe some don't want to use PayPal and take that extra step. Everyone is different. Let's see, Baba and Amazon. Entry point for the long term. Let's take a look at Alibaba. Remember, sentiment is extremely depressed in China right now. Doesn't mean we can't get worse. You do have a gap to fill at 83.95. I think you fill that gap, and that's where it gets really interesting. We're not oversold yet. All we have been doing is chopping. So again, it pays to just wait right now. I think that's the best bet. Have your targets And when they come, you make your decision then. There's no extra points for rushing here. Amazon, upward trend. Could we get a lot higher? Absolutely. Why? We do have a gap to fill, 163.06. But you need to get clear above 144.68. This is a nice trend line here. You may get a better price if NVIDIA does, whiff on their earnings, because they're a tech company too. So I may bring Amazon, maybe gets you down to 130. I'll save $4. But I think Amazon at this point is fine. The only issue is that if you're really trying to time it, maybe clear 145. That'll confirm the momentum higher in the name. Again, if you're someone really looking to really time it, again, if you like Amazon, you more than likely have it in an S&P 500 fund in your retirement already. So try not to overexpose yourself either. Amazon is a great company. I'm not going to say here they're not. They don't have the most stellar balance sheet. They don't pay a dividend either. They're not exactly shareholder friendly. Again, like a Microsoft that buys back shares, or a Facebook metaverse that buys back shares. So again, kind of know what you're getting with Amazon. It is a tech company that also is an online shopping company, but again, that's very tied to the consumer. So buyer beware. I do like Amazon long term, yes, but it's not without its risks. You think Tesla comes back down to 200 and 214? Definitely could. Definitely could. You need to get below 212.42. I mean, excuse me. If you're talking about 214, you need to break that 100-day, 221.47. Maybe we get a retest there. We need to break 241.75 for more upside. Okay, let's do NVIDIA rather quickly. NVIDIA earnings are today, after the bell. Upward trend line broken. We had this issue before. And again, we reclaimed it back to all-time highs. We pulled back. We're still above the 20-day. I cannot sit here confidently and say, I know exactly where the stock is going to go. I have no idea. The one thing I do know is that expectations are very sky high after that last earnings. I don't know of a company that can exceed such high expectations. So I would say NVIDIA is going to pull back. I think NVIDIA gets you to this gap fill here at 305.99. Not on one day, no. But I think we breach 400 at the end of the day, by the end of the session. If it soars, I will eat my hat. That's fine. I'm not going to be too upset as an NVIDIA shareholder, obviously, but I think that it's time for a pullback. And again, it's not overbought or anything, but the fact is that the expectations are just, to me, just so high. I don't know how they can knock that out of the park. And say if they do, and we break 500, my God, what's the next expectation going to be? And I always say the same thing. Trees don't grow to the sky. It's going to take a little bit to get there. What a move from the last quarter in May, from 300 to 500, basically, 481, excuse me. So again, I just don't see that happening again. I mean, people get lucky, sure. I mean, I just don't think those kind of moves for such a large capitalization company, you're talking about $150 billion in market cap in one day. I don't think that's sustainable, guys. I think NVIDIA long term, yes, will go higher, but short term, no. I don't think you want to be long NVIDIA here. Buying here, yes, we can go higher, but geez, it's already expensive. The momentum is juiced. I think it's setting up for a pullback. 371.52 is the 100-day. I think we breach below 400 by the end of the day. If I'm wrong, I'm wrong. I'm not going to trade it, but I'm leaning more to the short side on NVIDIA. That's just my call. I hope I'm wrong. I hope it soars. Are we closing the Amazon position for NVIDIA earnings? That depends. That really depends on the price action. So I really want to see how the day goes. I don't want to put myself in that box either that we have to close before NVIDIA, the earnings. But I am looking to, I'm leaning towards closing, again, just as a possible, risk management, because we'll have Boeing. And I think we're going to get both of them, to be honest with you, where we don't even have to worry, Joey. So I think, XOM energy. Let's see it. And XOM, guys, I've been still waiting for this gap fill here at 1447. We broke below the 200. We're tagging the 100. We talked about crude oil falling here in the video. And again, just needs to hold right now, XOM. So again, would I buy here? No. I think 102 would be okay. 100 is fine. Nice round number on ExxonMobil. Again, higher rates doesn't help them either because they really primarily work as a dividend. Here's the deal on crude oil. I think XOM goes higher. Why? We're starting to set up for a golden cross on crude oil. The 50 above the 200. We're probably about a couple of sessions away from that, depending on how we bounce. If we retest this 200-day at 76.49, right there is where we should bounce. If we don't, then that's where we're talking about retesting 74, possibly even the 70 level. The only way I see that happening is if the dollar really gets away from us with Powell. In terms of, he says something extremely hawkish that we're going to raise rates towards the end of the year, and then it just gets worse. The dollar would soar, yields would soar, and these dividend companies, these value companies are going to get hit because now they have to raise their dividends to attract buyers or even investors of their stocks, because that's really all they can offer is really dividends, sometimes buybacks. Here's a note on mortgages. I wanted to end the call or end the video here on this, that the effective rate on all mortgages across the United States is 3.60%. So I know we have around 7.5% mortgages currently. I think that we saw that. I'll give the number here soon. That's 52% below the current average of the 30-year rate, which is 7.5%. There you go. 90% of all borrowers have a mortgage rate below 5%. That's 9 out of 10 borrowers have, again, a fixed rate mortgage. That's below 5%. 26% of all borrowers have a rate lower than 3%. I mean, that's more than a quarter of the population of homeowners that have a mortgage. So we're not in that 2008 mode either. It's just going to stop people from trying to move and sell the house. So again, it doesn't make any sense to want to go ahead and sell your home. So this housing affordability, rates are too high, can't buy a home, they're so expensive. That's really relative to the perspective. If you're a homeowner and you bought a home before 2022, you are sitting pretty on a low interest rate, 30-year, maybe 15-year, depending on how you do it. Maybe a historical rate that may never be touched again. And would you want to sell your house? Probably not. You're probably going to stay in. You're probably going to work on your home. Home Depot, Lowe's, they just had their earnings. Again, those individuals that are homeowners are not going to invest in buying another home and moving when rates are so, when they're locked into such a low rate. We talked about the numbers. A quarter of them are below 3%. So they're not leaving. So again, what are they going to do? They're going to work on their homes, landscaping, build something, work on something, the house, paint the house. So Home Depot and Lowe's, that's what kind of props them up. They're also very Amazon proof. You're not going to order lumber online. So again, those kind of names in retail are still the best ones. But again, this is all about mortgages. This is all about rates. So my point being is that I went ahead and posted a note. I said, I think this is what I say for Friday. And again, I could be wrong, as usual. These two, I think, yields and the dollar reverse. I think we're overbought. We're not, I think. We are overbought. Let me go ahead and get that number to you guys. Let's take a look at the dollar rather quickly. Take a look at the dollar. Overbought on the 1 hour. Who cares, right? How about the daily? We're now at 70. We're above the 200-day. So again, tough sledding to want to say that we're going to reverse that or flip that because 105 looms. And again, that's a triple top. Boy, if we break that, things may get very ugly. And the dollar and the bond market are doing the Fed's job. Think about how mortgages have gone up in between these rate hikes. So these are the things that may even build where we may get, again, I can't really predict what Powell will say, but I think the reaction to his Jackson Hole speech will be favorable to the doves, meaning less hawkish, meaning they're not going to raise rates as high or stay as long elevated as people expect. That's why yields are higher and that's why the dollar's higher. And I say on Friday, those two will reverse, yields and the dollar, they will pull back or bonds will bounce, TLT. Again, that's oversold as well. The TLT 20-year bond fund. That was one of the top 10 picks of 2023. And you could see we filled this gap here. We're still below, but we're oversold too on the daily. This is what happens. If you remember, guys, last week we talked about Tesla. We traded Tesla puts. Apple, Meta, Microsoft were all oversold last week. What has been leading the rally, quote unquote? What's been leading the upside in the NASDAQ and the S&P? Tesla moved up in a day 8%. Apple has been trekking along from the lows of 170, 170 Friday to now 178. Metaverse bouncing as well, and Microsoft. So again, this is just what? Technical bounces, algorithms, because it's a liquid. It's a liquid and it's bone dry when it comes to volume out there, guys. It's just what it is. So we have to play technicals. I say that we're overbought on the dollar. We're oversold on bonds. I think on Friday that reverses. People or algorithms are going to cover those positions. That should help equities, but again, depends on the velocity. We can't have bonds soar too quickly, too fast. Why? Because then that creates demand, and that's going to suck away money from the equity market. Again, money just moves from left to right. That's all it is. The market is just going ahead, moving money, rotating money all around. Not a lot of fresh money coming in when people are on vacation in August. And again, not a lot of fresh money coming into the market when you can get 5% on bonds, risk-free. All right, guys, we'll go and leave it there. Have a great rest of your morning. I will catch you guys tomorrow for the next morning note. Have a great rest of your Wednesday. We'll see you on the blog. Cheers.